Are you a seller? Do you have a home or a rental property that you want to sell? Well, there's some things that you need to do to get ready for the marketplace. I'm William Smith with the William Smith Luxury Group at Coldwell Banker Realty in Carmel, California. And I've got some suggestions for you. I've got my notes down here and I'll go over these one by one. But very important that a seller be ready for the market when they first arrive, but some preparation work has to happen before then. So first on the list, sellers, get your property ready for sale. And there's some things that need to be done. The most important thing is get rid of your clutter. Now, you live in your home and that's your nest. And in your nest, you keep your treasures. And your treasures fill your closets, your attics, your garage, and they're in boxes and they're strewn about. But the important thing is understand that when you stage a house, you've eliminated the clutter. And that's the first step to a successful marketing staging for your property. Now, you can stage a property with a stager's furniture or with your own, and we can counsel you on both ways to do that. But the important thing is contact a mover. Ask them to pack up the first phase of your move, and that would be anything that you're not going to be using in the next 90 days. Why 90 days? Well, that's the normal market time that we'll be looking at here for the next 3 or 4 quarters. And what you want to do is make sure that the things that you're not going to be using, the 16 boxes in the garage that you haven't opened since the last time you moved, the coat closets that's jam-packed with coats that you're not going to wear in the next 3 months, and the things that are on the bottom that you can't see the floor of the closet, in the entryway, in the bedrooms, in the linen closet. So what you're doing is you're taking away the clutter. And why do you have clutter? Because you have these treasures. But they're your treasures. They're not the buyer's treasures. So what we're going to try to do is declutter the house with putting the things that are not necessary for staging the home and not necessary for your day-to-day life for the next 90 days. So now that's gone. Then you're going to select your listing agent. I have lots of great suggestions for that, but the important thing is there are at least 5 questions that you should be asking your potential listing agent, and you should probably look for people that can answer them to your satisfaction. I have a video about that. Please refer to it. Then once you select your listing agent or team, then you need to get your home ready for sale cosmetically and structurally. So you should get all of your reports done. Oh boy, why should I get reports? That's what the buyer gets. Well, let me tell you, the tradition of buyers paying for inspections has changed. And in Monterey County, here in California, we've been slow to accept that. But our neighbors to the north in Silicon Valley and the San Francisco Bay Area, they demand it. And that's who is driving our market right now. So if you have a buyer that is expecting to see disclosures and reports before they even look at the house, maybe, you better be in compliance with that. Now, about 8 months ago, I did a survey of everything that was active in Pebble Beach, and there was 60% of the sellers that had disclosures and reports available up front, and 40% that haven't. Of course, it's trending upwards from that. But in Silicon Valley, virtually it's 100%. I mean, if you don't have reports and disclosures up front, the buyers think you're trying to hide something. And those buyers are affecting the sellers who are coming to our market after they sell their home up there. And they expect to see disclosures and reports up front. So let's comply with that. And what does that do? It helps the negotiation. I'm going to explain that in just a second. But if you have a home in Pacific Grove, Monterey, or Carmel, you need to get a city report, and that requires that you get a sewer lateral. And what you need to do is make sure that that sewer lateral has been upgraded or passes the inspection test with a video report. And then you comply with all the things that go on with our older stock in those 3 communities. Now, the same thing holds true in our other Monterey Peninsula communities, but those are the ones with sewer lateral requirements right now. And that's very important that you don't get surprised with an $8,000 to $15,000 expense because the seller has taken on the responsibility of making sure that there's compliance for that. So my suggestion, get a home inspection, a pest inspection, a roof inspection. If you have a sewer lateral, get a sewer lateral inspection. If you have a septic tank, very important to get that septic tank pumped, inspected, and since it's empty, repaired, assuming that the repairs are relatively minor. So those are things that buyers are expecting now that the seller does, even before you hit the market. And then I have the sellers say, well, I don't want to pay that. That's the buyer's responsibility. Yes, but it could end up costing you more in the long run. And why does that happen? Because the negotiation isn't based upon knowledge for both parties of knowing what to expect. So the reports take out that mystery, and the reports are able to make sure that the seller and the buyer know what an as-is sale means for this property. So with the reports available and the disclosures available, they can be posted on the multiple listing service with a disclosure link. We use Disclosure.io through Coldwell Banker, and that gives the buyer's agent the opportunity to download that information and share it with their buyers so that when the offer's made, they know what's good about the house and what's not good about the house. And there's a value and a price for every level of quality. So if you've got an A+ student, the house is perfect, let's get the report card. If it's a C- student, that's fine. It has a value. Let's get the report card, and the reports are the report card. So now we come to the negotiation part. If you have all the information up front, the buyers and the sellers can agree on a price. Now, when there's a pest report and there's $13,000 worth of work that's to be done, it's an as-is sale. Now, 17 days of inspections that the buyer has the right to review the reports with their contractors or their inspectors. Now, the 17 days come and they can remove their contingency. Now, if they come back and say, well, you know what, this report that you gave us was $13,000. We think we should have you pay for that in the request for repairs. Well, you've taken the wind out of the sails by saying, wait, we told you that up front. We negotiated an as-is offer. So we're not going to do that. And because you sold it as is, you don't have to do that, even if it's asked for. Now, if it turns out that they do their own inspection and the first inspector missed $3,000 worth of work, and the buyer's inspector found it, well, okay, then you might have something to talk about. It's pretty rare that that would happen, but if it does, you've eliminated a negotiation, because so often if you do an as-is sale and then the buyer gets the inspection and now the inspection comes back, they'll want you to pay that $13,000. And that isn't what the seller had in mind when they did an as-is sale. So up front, having all this information available for the buyer saves the seller money. So sellers, remember, I call it a power pack. That's all the reports and all the necessary disclosures up front, even before the buyer sees the property. It'll save you money in the long run, and it's something I highly recommend. So now the offer's been negotiated. So next on my list, be available, especially during marketing, to have showings happen quickly. 24-hour notice is needed sometimes, especially if you have a tenant. But if it's just you don't want to be bothered and you don't want to be inconvenienced with a surprise showing, I'm going to suggest, if you really are motivated to get that property shown, the more exposure that your listing agent can get you, the better. But don't put all these restrictions on them so they can't show the property. And the more exposure you have, the more likely you're going to get your price, or a price higher than if you have low exposure. So exposure equates to higher value because you have more people with eyes on your property. So be available. Now, once you get into escrow, make sure that the buyers have access at the drop of a hat with their inspectors, because that 17-day inspection period goes by very quickly. And in order to meet the rate locks and all the other things that go on, you need to make sure that that buyer can get done what they need to get done. Because every time the interest rate goes up, 1% creates a huge amount of increased monthly payment, and that might make the buyer not qualify for what they thought that they could afford with the down payment that they have available to them. The ratio in the $1.5 million range is that for every 1% goes up, you have about 10% less buying power or borrowing power. So that's something that sellers need to be aware of to help your buyer accomplish what they need to get accomplished. So now the inspection period is coming to an end, and the buyer has discovered some things that they want to ask you to contribute to. Now, there could be any number of reasons why they're doing that, but when they come with you with an ask, take a look at what they're asking for. Are they asking for a reduction in price? Are they asking for the repairs that they discovered that they didn't know about before to be repaired? Are they asking for a contribution to their closing costs so they have more money available for repairs they weren't expecting? Now, if it's sold as is, then you have, as a seller, the right to say no. Now, there's 2 paragraphs in the California Association of Realtors Residential Purchase Agreement, we call the RPA. There's 2 sections in there, 10A and 10B, and they have to do with governmental retrofits and violations, certifications, and inspections. And most buyer agents check off the seller to pay for that. I'm not going to be popular with a lot of buyer agents, but I always counter 10A and 10B to be a buyer expense for a offer to be truly as is, because those are the only 2 paragraphs in the RPA that is going to be potentially a blank check. Now, that doesn't exclude that if there's something discovered, a violation, let's say on a 40-year-old construction that had no permits, and all of a sudden the city gets involved with wanting to get it upgraded or permitted. Those are some unexpected expenses, and there should be some conversation being done. But for the most part, the requirements are restricted to toilet retrofit, making sure that you have smoke detectors and CO2 detectors and hot water heaters that are properly strapped for earthquake protection. Those kinds of things are all things that fall under that governmental requirement section in 10A and 10B of the contract. And it's usually $1,000, maybe $2,000. So it's not a lot of money. But when there's a surprise with a violation or something that's going to cause a lot of expense, you need to be aware as a seller that you need to protect yourself with some sort of limit. The other thing too is if you do agree to toilet retrofit, you might want to buy a $400 Kohler, and the buyers might want you to buy a $1,000 Toto toilet because you have to change the toilets from what most of the homes have at 1.6 gallons to 1.28 gallon, which is what the requirements are here in most of Monterey County. So those are some of the things that can be done with a cash contribution or a limit, and then the buyers can do whatever change they want. The Monterey Peninsula Water Management District has a 180-day extension, so that if you're going to remodel a bathroom and you're going to change the color of a toilet, then you'll want to, as a buyer, have the budget contribute to the future remodel and not have somebody put in a $100 Glacier Bay from Home Depot just to fulfill the requirement. So those are some of the things that can be talked about with the governmental retrofit. But remember, that is a blank check, sellers, if you don't handle it right. So let's say that the request for repairs has been negotiated. The buyer asks for $13,000 and the seller says, no, I'll give you $3,500. Once you get that negotiation done, get over that hurdle, now you are wait for the appraisal contingency. What if the appraisal doesn't come in? Well, we've got to talk about what happens. If the seller says, well, I'm not going to lower my price, well, the seller doesn't have to lower the price, but do you want to lose the buyer? If you can replace the buyer and you can get your higher price, then you just say, well, I'm not going to do anything. But let's say you can't replace the buyer easily and you're ready to get this thing sold. So the appraisal is $20,000 too low. Go ahead and compromise. Maybe the seller contributes $10,000, the buyer contributes $10,000. Maybe the buyer's going to be stubborn. They say, I'm not going to buy it for 1 penny over that appraised value. It might die. Well, at that point, the seller has to make a decision. Do we sell it for appraised value or do we move on and find a new buyer? The buyer still has contingencies until they, in writing, actively remove the contingency that is still in the contract. So beware, sellers, that if you decide to cancel the escrow because the seller's not performing or the time has run out, you give them their 48-hour notice to perform or quit, and they still haven't come up with a solution to the appraisal problem or the inspection request for repair problem, the seller can go ahead and cancel at that point, giving them a notice. Usually it defaults to 48 hours. And if you have a backup offer, then you tell that backup offer, hey, gear up, you might be in first place soon. So if in fact that part of the negotiation starts to falter, there are some things that can be done to remedy it. So let's say that everybody's happy, the $3,500 has been agreed on, the request for repairs, the appraisal came in at value, and the loan has been approved. So all contingencies have been removed. So the active status was when the property was on the market. The contingency period is called active contingent. AC is the status in MLS. So the buyer can rest assured that only backup offers can be taken during that time, but sellers can be protected by having buyers put in backup offers during that inspection period, because it's not a firm deal yet. It's only a maybe at that point. So then the contingency period is over. The contingencies have been removed to everybody's satisfaction, and now it goes to pending status. That's P in multiple listing. Now, something that I've noticed, Zillow doesn't put pending properties in Zillow anymore. The contingent properties, the AC status, they do. So sometimes you'll get the telephone call, hey, I noticed the property is not contingent anymore. Is it available? Can I buy it? Then sellers, the reason your property doesn't show up on Zillow is because that pending status for a week or two is the time that it's not being reported. And I say Zillow, I'm not sure if all the different MLS reporting services have the same situation, but I do notice that I get that occasional call saying, what happened to the properties? Is it still available? So once it is sold, then it shows up as sold in all the places that you see sold listings, including Zillow. So those are the things that happen during the different phases of the MLS status changes. Active, AC, active contingent, P for pending, and then sold. So with that, we've got now the next stage. What happens with preparing for the move? Okay, let's say that the buyer wants to move in the day after close. Well, that means the seller's got to get ready to be out of there in time and get the place cleared out and cleaned up, and now utilities and things are going to be changed. So make sure that if you do cancel your utilities as the seller, that you tell them it's being sold and that you'd like the day after the close of escrow to be your last day of billing, and that the buyer will be calling. So the buyer's agent will help guide the buyer to do that. And that's for all your basic utilities. The important thing is that you don't just cancel and then, it closes on Friday and Saturday the buyers move in, they have no electricity or water. You need to make sure that you coordinate the effort, and the two agents will usually help do that. So what we're looking for is to make sure that the transition of possession is easy. So When the seller yields possession to the buyer, that's what that term is referring to. So let's say that the buyer has negotiated with the seller that the possession is going to be 3 days after close of escrow. So you can close on Friday and let the buyer move out over the weekend, and then the seller move out over the weekend, and then the buyer takes possession on Monday. That's a comfortable way to do it. Usually there'd be no charge for that. But let's say that the seller needs 2 weeks. Well, a traditional way to handle that is that the expenses that buyer has, their principal payment, their interest payment, their taxes, and their insurance payment on a per diem basis, the per day basis, that is a fair number. So in the $1 million to $1.5 million range, that could be $200, $250 per day that the seller would agree to pay. Usually they leave it in escrow with a security deposit, and then they can stay for a couple of weeks. And that's a comfortable way to do it if the seller needs that extra time. After they have their money in the bank, maybe they need it for a deposit or a down payment or something for their next property they're going to move to, but they don't have it until they close the escrow. That would be a excellent way to do it. There is a time limit for possessions based upon what the status is that the seller has as a license for the seller to remain in possession, and then at some point the seller becomes the tenant with tenant's rights. What's that time frame? 29 days. So the first 29 days, there's a document that is seller licensed to remain in possession, and after the 30 days, then the seller to remain in possession as a tenant. So now the tenant, I mean, whether it be 3 months or 6 months or a year, they have tenant's rights, and now the buyer becomes a landlord. So not all buyers want to do that. And there is some limitations for different types of loans. Fannie Mae, Freddie Mac, VA, FHA, they have time limits of how long a seller can stay there, because they don't want to give a owner-occupied loan rate for a rental, and that's why you need to check with your lender to how long that time could be. But 29 days is usually okay with everybody, so you need to verify that if you're going to let the seller stay. So with all of this information, sellers, you're better prepared to be a successful seller with a streamlined escrow and a negotiation that works, and making sure that your representation is not challenged or renegotiated during the different hurdles during the escrow period. I'm William Smith with the William Smith Luxury Group. Please, in your comments, ask more questions. I can update our video content. If I've missed some, I can give you specific information. And besides that, I love hearing from you. So subscribe to our channel. Look for the next video, and I look forward to serving you. If you have questions on any of this as a seller, we'll be happy to do that. And watch for our video on what a buyer should do in order to go through the same process. William Smith signing out. Thank you for joining me, and thank you for watching our YouTube channel.